Okay. I take it that we are live.
Yeah, I got to get used to this 5:30 time.
I know. Well, you mean 5 o'clock time.
Yeah, that's what I'm saying. I'm still not used to it.
Okay.
Struggling.
Well, we got a lot to jam pack in today's 30-minute episode. So,
Mhm.
without further ado, go ahead and cue that intro for us. All right. What is up, everybody? I am Mark Monroe, accompanied by my wonderful co host, co producer, co creator, and all things galactic. Give it up for none other than the wonderful.
It's Jolene GC in the place to be. What does it, cousins, on this fine Tuesday evening?
Indeed, it is. And welcome to Executive Education, where, as you know, it's like, of course, we talk about investing, we talk about, markets and all this other stuff here at the Come Up series, but we like to give it another extra twist, taking it to a whole nother level, which is giving you that type of conversation, raising it up as Jolyn would do, where these are the types of conversations that executives, chief level officers, and anybody in between, these are the types of conversations that they have. So we would feel remiss here at the Come Up series if we didn't bestow it upon you. Some of the things that you may know, some of the things that you may not know, and some of the things you're going to be like, oh, wow, just completely mind blown. And that's great. So if you haven't done some of the ordinary stuff out of, like, if you don't know how we do, go ahead and smash that like button first. And on top of that, make sure you have that bell turned on so that way you could be like, who was it, Jolyn? Who was it? Who was it? Who was first in the chat today? We had Lady in Mauve.
Lady in Mauve, how you doing?
She says, greetings, cousins, and we salute you because you had your notification bell turned on. And it was actually interesting because as soon as I had literally released the actual live, ready on it, finger on the button, she's just like, look, I ain't gonna let this come to pass. All right, so we salute you. And if you want to be saluted on our next show, go ahead and make sure that you have your bell turned on. All right. And on top of that, if you want to check out some of the other cool content that we have here, because think about the type of shows that we have. We have Monday Night Take with Lawrence and Tiara. Then on top of that, of course, you have, your faves, Jolyn and Mark here, kicking it. But, let us not toot our own horn. But then on top of that, we got Abby and Chris with the Red Line coming in tomorrow. And then on top of that, we got Mark and Mo coming through for Hot Take Thursday. So this should be fairly interesting, as well as Money Market Truth. So there's a lot going on, and you never know what else is coming down the pipeline because we do got some things in the works. So we've been very busy, though that we've been very silent. So, just hold on. We get a lot of DMs from you guys asking us for specific content and specific subjects. We're getting to them. We're definitely getting to them. All right. So, Jolyn.
Yes.
Are you ready to talk a little sustainability in the room here?
Hey, just a little intro or whatever. Just there's a lot to cover. So, just a little snack.
It's just a splash. It's just a splash. So, okay. So I've got a challenge to literally try to knock this out and make sure that it's, give the edification to the people within 30 minutes. So I think we can knock this out. Do you think so?
I think so.
All right. Well, you know what? Well, let me get this sip of water.
Oh, yeah. I'm glad you said something.
Your water's more fancier than mine is today. Today I'm in the trenches.
I have that good crushed ice going on. So
okay. All right. Well, let's do it. All right. So make sure that each and every single one of you have pen and paper ready at home. If you're watching us from Twitter, if you're watching us from YouTube, or if you're watching us from our friends over there at LinkedIn, we salute all of you. Thank you for joining us this evening. All right. So let's fire up that presentation, shall we? Can we fire that up? I think we have it. All right. So, introduction to ESG, but it's like we ain't going to just give you all no intro. Now, this is going to be a two-part series. So, today we're going to get into some of the introductory stuff, but you know how I do when it comes to introductory. Sometimes my introductory is a little bit more not so introductory, but yeah, let's do it. All right. So, introduction to ESG. So, let's get to the stuff that we're going to talk about today first. So today is all about the understanding part. And then when we come back, we're going to talk about the prioritization of it. So that way you can get a full spill of it and really take the time to like literally let the first part digest. So we're going to talk about what is ESG. We're going to talk about ESG versus responsible investment. And then on top of that, we're going to talk about why is ESG important. I think that these are three solid points that we can probably get to this evening for everybody to understand. Now, if you've been following along with what I've been talking about, whether it's consumer behavior, consumerism, or consumer engineering, and then also financial analysis, all those things that I've done within executive education alongside with Jolene, this is actually leading to the step because a lot of people have been asking us, okay, hey, well, what are some of the next edition tips that we're going to be bringing to the stage, right? Well, this will kind of give you an idea of how to look for your own SIPs. And a part of that is this is the next frontier that a lot of folks don't talk about, but they should be talking about because over the next 5 years, we'll probably start seeing some of those impacts really start to solidify. And I'll show you some examples in today's show. And then on top of that, over the next 10, 20 years, you're going to see you're going to start seeing consistent changes as it pertains to market leadership based upon ESG. So I really am excited about what is it that we can provide to you guys today. So without further ado and all the pomp and circumstance, let's get into it. Like, for example, number one, what is ESG? Now, I think this is the first thing that we can look at and say, all right, well, what is ESG? Like, what is its purpose? What is its function? Like, why does this have impact in our lives? Well, of course, to break it down simply, it's broken into it's really 3 letters. One is E, environmental. 2 is, or the S is social, and the G is governance. And we're going to get into those actually right now. For example, what is the basic structure of environmental social governance? Well, it's a generic term used by investors to refer to the factors that can affect a company's ability to create long-term value. It also refers to intangible assets. So if you really think about it, on one side, it's really how is it that we relook and how is it that we rethink things as it pertains to how businesses function. But then at the same token, it also looks at how we look at it and how we operate and how does it build things that become assets over time. So that's some of the cool things in which that we have. We just had Butter jump up on the couch to join us. So apparently he's very much so interested in the subject.
Loves ESG.
I know, right? All right. So let's break it down real quick. When we think about environmental, we think about things like what? Pollution, biodiversity loss, climate change, which I'm probably sure that everybody's witnessing it. How is it possible to literally have an incomplete winter storm in Texas where snow completely takes over Texas? Deforestation, resource depletion. So you're starting to see a lot of that start to transpire. And then, of course, waste management. What is it that we do with waste? So, like, for example, where we once upon a time used to have, oil companies dump their oil into the water, which would ultimately contaminate and ultimately kill off livestock and everything else. They've gotten a lot better in that process. Now, have they completely finished the mission? Absolutely not. There's still a lot more work to do. All right. So then we get into the social part. So then we have human rights, child labor, product safety, product mis-selling, which is interesting, like, misleading and everything else, not being transparent there, labor standards, and employee relations. So that literally sums up your social part. And then when we look at the governance, exactly how is it that the company or how is it that your organization is actually governed? How do they operate? And we look at those things like, for example, the general stuff, the traditional stuff, right? The accounting, how a board is, like the board composition. Then we look at things like such as bribery and corruption. Like, for example, a lot of companies get really dinged on that because of the fact of, all their lobbying that they've been paying off, whether it's politicians. Notice how you're starting to see a lot more folks being scrutinized by having corporations sponsoring or corporate backed sponsored politicians. That's been highly scrutinized, and a part of that is because of governance, which is within ESG. Executive pay. Remember how we saw that Google or Alphabet was laying off X amount of people, but yet their CEO was highly scrutinized because his salary was still ridiculously high, including his bonuses. And then, of course, we got things like tax avoidance and shareholders' rights. So there's a lot that literally ties up into each and every single one of these scenarios, into each and every single one of these categories. But altogether, if done correctly, and there are companies that are doing a lot of these things very much so correct, and you can see the results of them, which we'll get into in a second, of what it looks like to see a company that is completely stable and completely ESG compliant, or say, for example, leading the charge within ESG. And if you guys can, just to interact with us, I just want to get an idea of what everybody thinks ahead of time. So if you can, in the chat, I want you guys to probably list a company that you think that is at the top of the list when it comes to ESG. Now, for those out there, since, this is an honors code, try not to use Google University, and try to just give us your best shot as it pertains to your best guess.
Yeah, and we've talked about some of these companies before. So
we have. Some of them we've talked about ad nausea. So, all right. So, okay. So we're gonna wait to see some of those responses come into play. Now, of course, there's this is one thing, right?
Mm-hmm.
But then there's these, right, where it's the 17 sustainable goals, or what we like to call SDGs. So, and SDGs are pretty much what are the things in which that we look at as it pertains to being able to define a company as sustainable. So there's 17 of them. So there's, let's just name a few. Like, for example, we got good health and well-being, quality education, gender equality, reduce inequalities. Let's see, responsible consumption and production, climate action, industry innovation, and infrastructure. So innovation does play a role when it comes to ESG, believe it or not. Life on land, partnerships for the goals. So are they meeting those things? Decent work and economic growth. Interesting how economics can also play a role into this as it pertains to ESG as well.
Well, what's interesting about this, Mark, this is the United Nations 17 goals that was published a couple of years ago. And, just as an individual person, when you're thinking about what it is, what your contribution in the world is going to be, sometimes you can start here and look at, if you go to the UN site and look these up, or just Google, the 17 Sustainable Development Goals, you look at this, and then they break it down and give real world examples of what companies and organizations are doing to meet these goals. And so there's subcategories underneath each of these kind of broader goals.
They are.
And it could really help you figure out, okay, the things that you're interested in, what's going to be your contribution, what's going to be your purpose. And there are also, there's a social component. So there's groups that you can connect with that are also doing these same things. So it's also a good way to really get involved with what is going on in the world and think outside of yourself, and then also contribute to the sustainability of the globe, basically.
That's a fact. All right, so let's dive a little bit deeper in it, shall we, Jolene?
Mm-hmm.
All right, so let's look at it, because this is where the key crux of a lot of our conversation is built upon today. So, don't worry, I'm going to read it for folks in whom which that will probably be listening to this via podcast, so that way they're not left behind either. So when we think about it, we have really the 4 pillars of RI, which we're going to get into in a second, but it's pretty much ESG is incorporated into responsible investment. I mean, that's really a major pillar as it pertains to what transpires. So when we look at it, it's built upon 4 key pillars, which is ESG issues, active ownership, transparency, constructive management. Now, let's break these down real quick, shall we? Now, I mean, when we think about it as it pertains to the responsible investment, we say it's an approach to managing assets that sees investors or that sees how investors include ESG factors in their decision-making process, whether it's what to invest in, B, the role they play as owners and creditors for the long-term sustainable returns. So, but let's get a little bit deeper into it, shall we? So, for example, when we look at, for example, the ESG issues. So these issues encompass a wide range of topics, including climate change, labor practices, diversity and inclusion, which you guys probably hear about D&I a lot, board independence, as well as executive compensation, and much more. So those are like pretty much the broad spectrum of the issues when we look at it within the ESG standpoint, right? But then we get a little bit deeper, right? We start looking at things like active ownership. And when we look at active ownership, that's the proactive involvement of investors in influencing the behavior and decisions of the companies they invest in. So, for example, when you start seeing activist investors join boards, or when they start making large investments. So, for example, normally when you see a group or an entity that normally takes about, a 9 to 10% holding within a publicly traded company, 9 times out of 10, they're going to be stepping in to probably make some type of wave or some type of noise or some type of action or change within the company. I mean, we've seen this happen with oil companies where they brought on activists, where they had activist board members that now change the entire landscape of the overall company. And that's where active ownership really comes into play. All right, so which leads us into the next piece, which is transparency, right? Mm-hmm. So, and transparency is simply the extent to which companies disclose relevant information. So about their ESG practices, their policies, and their performance. It's kind of like, if when we hear about, their report card every quarter where they say, okay, hey, this is what we did. This is how much revenue we brought in. It's that type of transparency reporting, but we go a lot deeper. So for example, what are the goals that you're trying to accomplish? Are you trying to become more sustainable? Are you trying to become more net? Are you trying to get net neutral or net positive, which means that you're trying to get to a place where you're not so heavily going into the earth on the environmental side, but more so using the materials that are around you, and you're transparently reporting these things. And normally you typically see these things. I challenge everybody today, after today's show, check out like the impact reports or the sustainable or social impact reports. A lot of companies now that are publicly traded, if you go to their investor relations side of their website, you now will start to see those things. And even in tech companies, you even hear about them in reporting, which I'll get to in a second. And then we have constructive engagement. So the collaborative and dialogue-based approach taken by investors to encourage positive change in companies. So now, literally, investors are now starting to have more of a sway. It's not just, okay, hey, just within, it's not just our voices, but it's also the fact that now we have the power to move companies with our dollars. No. And so, go ahead.
No, go ahead. Finish your thoughts.
No, because I think you're going to nail it. I think you're going to go right into it. Go for it.
Oh, so I wanted to bring up who from the chat, the companies that they're throwing out there for ESG policy. So we got Apple, Tesla, Costco, Microsoft, Texas Instrument, and Deere.
Mm-hmm. So those are some pretty solid companies. And yeah, they're all making some significant strides within their ESG goals. One of them completely leads the pack, which we'll get into. But let's dive a little bit deeper within these 4 pillars real quick, right? Mm-hmm. So when we think of active ownership, and we already talked about it as it pertains to the companies being proactive and everything else, like their involvement as investors, influencing the behavior and decisions of the companies. So, typically you see that within voting on shareholder resolutions. So like if you listen to an earnings call or if you ever listen to a shareholder meeting, this is where they really they take advantage and they really start to set in with the questions in which that they ask, that they hold the chief level officers accountable as it pertains to within their leadership. And of course, really just continuing the dialogue of specific issues. So that way, essentially, it's like you're kind of holding their feet to the fire. When we look at ESG issues, right? Because of course, we talked about it from the wide encompassing issues of it, but it's really the simplest part is again, when we look at exactly those key fundamentals that we talked about earlier of those main pieces of environmental, social, and governance. When we look at the transparency part, we talked about it as it pertains to how it's disclosed and everything else. But the transparent reporting allows stakeholders, including investors, to assess a company's ESG risks and opportunities, enabling informed decisions making, like, you know, as it pertains to more accountability. So those are major parts there. And then when we think about constructive engagement, you know, where we said that it refers to collaboration and everything else, it involves an open and respectful communication between investors and company management. That's one. And then, of course, the second part is addressing the concerns, sharing insights, and working together to improve like the overall sustainability and performance. So those are the things in which that if you see companies that are doing well in that, then essentially 9 times out of 10, you know, where you see companies making great strides there you see dollars also follow, which leads me to a major company. How does this company become one of the most valuable companies in the entire market? And let's talk about it, shall we?
Yeah.
Let's talk about our good old friends over there at Apple, over there in Cupertino. So when we look at Apple, and I'll blow this up so that way people can like literally have the full-fledged screen here to look at it, just in case they want to take notes as well. All right, so when we think about Apple shareholders, right? They have actively engaged. Apple shareholders have actively engaged the company on various ESG issues. For example, in 2018, a group of institutional investors collectively managing over 10 trillion in assets urged Apple to address the potential negative impact of excessive smartphone use on children's mental health. As a result, Apple took the steps to enhance parental controls and introduce features to help users manage screen time. So when you think about like a feature that Apple has like now really like talked about very heavily, where it's like now a lot of parents utilize it, this was formulated strictly directly from ESG that was brought by other shareholders that brought in like that were able to move financial muscle and were able to say, okay, hey, Apple, these issues matter to us. If you are going to address these issues, then this is something that would get us excited in investing more and more into Apple because of the fact of its impact. If not, then we'll probably take our dollars elsewhere. So that's one of the major things that we look at as it pertains to active ownership. So that is an example of what you would see for active ownership. Now, again, as a result, like I said, that they took the steps for screen time. But what were some of the ESG issues, though? Like, for example, Apple addresses a range of issues regarding environmental factors. If you ever look at, like, for example, when they release a new product, have you ever noticed that they talk more about the sustainability as it pertains to its recycled? Now it's like we're getting to a place where probably 100% of Apple iPhones or Apple devices will be made by materials that they've already recycled without having to go further into the earth. Well, that's amazing because it has such a high impact, right? But yet at the same token, like everybody's like, yeah, Mark, we get it, go green and everything else. No. But think about the amount of dollars also that Apple saves within that process without having to go through the mining process and everything else. To be able to sustainably recycle those products, they're able to save significant amounts of costs. And in saving a significant amount of that cost, they're increasing their profit margins or keeping their profit margin stable. Like, for example, in a high inflation environment, don't worry, I'll wait. How is it possible that Apple didn't raise its price of its iPhone when everybody expected it to raise its price of its iPhone? How come they didn't? Because they had the pricing power and everything else and the infrastructure already set in place where they weren't as heavily impacted, which is another thing economically. Because when you do it the right way and when you handle it within an ESG format, then essentially now it's like, okay, hey, you're not going to be impacted as heavily due to economic swings. And that's one of the things that where Apple really has a strong foothold. So when we think about it, like reducing its carbon footprint, the transition to renewable energy. So like, for example, you're going to start seeing more of corporate offices using water cooling versus like, consistently tapping the grid. Those are major pieces. And Apple prioritizes that even within their supply chain. If they notice that there's issues within the supply chain, even if it's like child labor or anything like that, they immediately jump on and literally just nip it in the bud.
You know what's cool about all this though, Mark, is like you'll notice the trends of all of like the marketing buzzwords of like go green and all that. But within the ESG context, it's directly tied to dollars.
Yep.
So if it doesn't make quote unquote, ESG sense, it's not ESG. There has to be some other, for when we think of it in the context of like investing, there has to be some tie to the bottom line. And those buzzwords really don't matter at all. Like going green or, eco-friendly. That's just those are the words for the consumers. But when we're talking about the words for the investors, it has to translate to dollars. And Apple has done a good job of that, as illustrated by the inflation example you just gave.
Exactly. And there's so many other things in which that they do, like, for example, within their transparency. And then on top of that, they work with NGOs across the board. So like as it pertains to collaboration, to improve working conditions in the supply chain. So like when we hear about things that happen in China, like Apple's immediately there, like, hey, we ain't gonna wait. Nah, we're there. And so it's just a matter of how is it that they address those types of concerns. And they've been pretty much the poster child of essentially how it should be.
Oh, another thing, Mark, you just made me remember this.
Yeah.
So, okay, like at the height of 2020, when there was, all of the Black Lives Matter, corporate bandwagoning and all that, you can tell if a company, it's kind of messed up, but you can tell if a company is really serious about those types of issues when it ties somehow to money. If it doesn't tie to money, then they're not serious. They're playing in your face.
Exactly.
So that's something to take into consideration, because they'll have to justify it to their shareholders. Yep. So they're able to say, hey, look, I know we're out here on this activist front. However, being here, translated to X amount of dollars or an increase in the profit margin or whatever, then they're serious about it. And it's kind of messed up that it's like that, but at the same time, it's a good
way. It is.
If they're really serious about it.
Yeah. So let's talk about this next slide, shall we?
Yeah.
All right. So like where we talk about RI, like, because a lot of folks are like, well, responsible investment is going to literally completely, is going to literally knock out traditional. And that's not true. So when we look at it as it pertains to the traditional way, as it pertains to business, we have the traditional pieces of financial analysis of how we analyze companies financially. And then also how is it that portfolios are also constructed. Those things don't change. If you think about it, financial analysis plus construction management plus portfolio construction in the traditional sense equals responsible investment. So those two things literally help piece those things together. So I drew a nice little diagram. Please don't, please don't kill me on my diagram.
Oh, Lord.
And this is where we're going to get into the key crux of it. But, hopefully everybody is able to follow along. So please don't knock my handwriting. I actually drew on this for everybody. All right. So let's look at it. Right?
I'm just kidding.
Don't do it. Don't do it. Don't do it. All right. So it's just a simple thing of responsible investment is different from sustainable and impact investing. Okay. So I drew a chart for you guys, which is over in the bottom left, we have the low. And then, of course, to the far right and to the upper left, we have high. Now, to the vertical, we have financial returns. And then to the horizontal, which is on the x-axis, we have level of impact. So the financial returns over the level of impact, just to keep it simple. So when we think about financial only, the financial returns are very high, but its impact is ridiculously low, right? But then when we think about impact only, their level of impact is extremely high, but their financial returns are extremely low. Now, when we look at responsible investment, though, the impact is getting there. It's still the major building block, but yet at the same token, its financial returns are very much so high. So when you look at like a company like Apple, they would probably fall or probably even be a mixture between responsible, sustainable, and impact investment all combined. Now, some folks, they literally focus on responsible investment. Some folks focus on sustainable, and then others focus on impact investment. And as you look at it across the board, whenever you hear about these things within reporting, or when you look at it when you look at like the high level of impact, then those are going to be organizations that are highly mission focused, and they're like, okay, hey, we're going to like literally sacrifice on mission versus essentially the financial return or over the financial gain. So we care more about the actual impacts versus the financial gain itself. And a lot of times you'll find that within, like, for example, your nonprofit organizations, right? So that's normally where you'll find them. Whereas the financial only that's more so found in like financial returns that they focus on will probably be your for-profit. So on one side you got for-profit, and the other side you have nonprofit. So in between you have, you know, those in whom which that either get that read and understood the assignment, and then the folks in whom which that, you know, possibly didn't understand the assignment or just didn't decide to do it at all. So when we look at it as it pertains to that, like, there's not one that's greater than the other. I mean, it's just a matter of where your company's focus is and what is it that you're doing on a level of impact, and also how is it and how is it that you're positioned. But there's another company that we normally don't talk about, that essentially that we can use as an example for this, that can really help paint the picture for folks. Okay. Let's talk about a company called Unilever. So they are a multinational consumer goods company known for its commitment to sustainability and responsible business practices. The company has set ambitious environmental targets, such as reducing its carbon footprint and water usage, promoting sustainable sourcing, and minimizing waste. Unilever also focuses on social issues by supporting gender equality, fair labor practices, and community engagement. So through a sustainable living plan, which that's something that if you get the chance, just, you know, Google it, Unilever sustainable living plan, and ongoing efforts, Unilever exemplifies responsible investment by integrating ESG considerations into its business strategy. And that's just pretty much demonstrated by that the sustainability and profitability can go hand in hand. So when we look at it from this standpoint, when we look at environmental, just to keep it simple for everybody, for Unilever, the goal is to achieve zero non-hazardous waste to landfills, reduce greenhouse gas emissions and water usage and waste, right? You know, those are, and waste generation. When we look at it on, say, for example, the social side, promote gender equality, all those and all those different types of practices through specific initiatives. Like, for example, they have a one called I think it's the Unstereotype Alliance, and programs for hygiene, education, and sustainable agriculture. And then, of course, we have the sustainable sourcing, which is contributed to reducing deforestation, protecting biodiversity, and ensuring fair trade practices, setting example for responsible sourcing in the industry. And then, of course, consumer influence, gain in consumer loyalty through sustainability commitments, raising awareness, and empowering consumers to make responsible choices. I mean, these are all the things that when you make significant investments to improve the quality of your the quality of the lives of your customer, or the quality of the experience of your customer, then those things will, like, for example, like what we just used with Apple. You know, the reason why people buy Apple products is because of the fact that they know it's a premium product, and the reason why it's a premium product is because the company spends a great amount of time to craft such a product and take the necessary time to get it right. They don't always have to be the first, but when they do it right. And the same thing is held for Unilever. When they do it, they're going to do it right for their consumer base. And that's the focus, because when you do that, I mean, the stock is up currently, like, year to date, 3% in an arena where it's like, okay, hey, it's probably not their shining year. But I mean, whereas maybe some of their peers in the industry will probably be struggling this year, they're still at a positive. And of course, yes, they are a British company. So again, like, these are the things in which that we look at as it pertains to, like, the ESG footprints. Now, many of you guys are sitting back and saying, all right, Mark, I've heard all of this. This sounds good. Why the hell is this important? So the ESG factors are critically important, both financially and economically. So I'll read it for the folks back at home, and then I'll break it down for folks. So when we think about financially and economically, they help companies manage risk, improve operational efficiency, access capital, enhance long-term sustainability, and contribute to economic resilience. By addressing environmental and social and governance challenges, companies can drive financial performance, meet stakeholder expectations, and positively impact economic well-being. So let's go a little bit deeper into that on the finance side, shall we? So the ESG, like on the finance side, you know, ESG factors are crucial financially as they help companies manage risk, improve operational, and all those other things, right? By addressing the environmental, like the ESG, the main ESG points. But this can also help them, like we said, mitigate risks that can impact financial performance. Sustainable practices can reduce costs, improve profitability, which we've seen from companies like Apple and Unilever, and attract investment from ESG focused investors. See, it's like the mind of the investor, the market itself is changing. What we once thought about considerably on the traditional side, it's evolving. We're like, think about like today's average consumer. Back then, it's like people bought things because of the fact that it was like, okay, hey, this is a necessary need, where it's like, okay, hey, I don't really care. It's like about all the background story. It just gets the job done for me. But now think about like how people buy things today, the mind of the consumer today. Yeah, they're going to buy things out of necessity. We're not going to say that those things are going to absolutely leave. But let's say, for example, if you knew that, say, for example, that this company, doesn't care about you when they like literally put in a bunch of products and everything else, or a bunch of hazardous materials into the product that you are going to place on your body, you're probably going to rethink whether or not you're going to actually buy that product or go buy something else that's more sustainable, more environmentally friendly, more eco-friendly, as well as something that's healthier. These are the types of things that can literally have impact on a company. Now, when we think about the economics behind this, like the ESG factors are important because economically, as they contribute to long-term sustainability, right? Like we got that part. By embracing sustainable practices and addressing environmental and social challenges, companies can enhance their competitiveness, one, their reputation, and brand value. This allows them to meet stakeholder expectations regarding ESG issues that lead to increased customer loyalty, one, employee satisfaction, two, and overall economic well-being. Additionally, governments and regulatory bodies focus on ESG issues that reflect the growing recognition of their economic impact and the need for responsible and sustainable business practices. So you're asking me, Mark, like, okay, well, what does that mean? Like, companies that have positioned themselves very well on the financial standpoint, we know them, right? We've seen them a dime in a dozen. But the companies that do even exceedingly better are the ones that are not only able to do it well financially, but also on the sense of economically. So, for example, even in an economic downturn, they're still outperforming. They're still doing well because they made the necessary investments. And when they made those investments, they cut back on significant costs in certain areas, but then on other areas, they essentially made those investments early on. And now those things are starting to pay off where it's like pretty much a fraction of the cost. And so for example, even if it's at a fraction of the cost, right? Like I'll throw in Tesla, for example. Tesla did things on an environmental standpoint, which was reinvesting into recycled rare earth materials versus consistently going out there to mine. Okay. Whereas everybody else is still trying to mine for those materials, which set them back significantly as it pertains to getting their products to market, right? Well, since Tesla was already thinking ahead of time, saying, okay, hey, yeah, we're going to spend the billions of dollars to get into the recycling side of the table. But then what happened? Now that they put that into their process, now it's much more easier for them to manufacture products and everything else and get to market a lot faster.
And when you get to market faster, you make money faster.
And think about it like this. We've seen Tesla cut cost on their products. But has it really hurt the company?
No.
And that's the point. And that's the point. That is the point that I'm ultimately trying to make there. When you make the necessary investments today, like I said, over the next 3, 5, 7, 10 years, these companies are going to be probably juggernauts because of the fact that they're so positioned well. And the companies that are trying to struggle to get to that place or to try to implement those things. Yeah, it's going to be a struggle because now the cost of capital is higher. Things are not probably the most economically, they're not the best economic situations. And those things will hurt their bottom line. Now, will they get better over time? Probably, if they can weather the storm correctly. If they can't, then they'll probably fall to the wayside and they'll probably be an acquisition target.
Right. If they're lucky.
So that's just the first part of what we have for our ESG presentation, because there's so much more that we got to get into. But again, this is really going to set the stage for essentially many of you as you look forward as the future of your portfolio, or how is it that you construct your portfolio. This is going to be a major part that's going to play in not only just what we look at in the basics of fundamental analysis and technical analysis, but now you have to add in a whole different part, a whole different side to the table, which is the ESG forefront. And I think that it's well worth it.
I mean, well, as evidenced by these profit margins. I mean, that's look no further. If you want to make money, you have to select the companies that are about this ESG life. I mean, there's no other way around it.
That's a fact. That is a fact. Well, I mean, how did I do? I finished the presentation. We finished the presentation today, or part one of it.
Yeah, I mean, we did it. I mean, we gave extra 12 minutes, you know. that's not bad. Not bad at all.
Okay, so somebody asked a question in the chat saying, how does the multinational tobacco company, which boasts scored of an 84 on its last S&P Global ESG score, more than twice that of Tesla at 37? So that's a good question, because a lot of times we look at Tesla and we look at Tesla for its environmental, and we just like one of the key things that we kind of find ourselves is in a position where many times we only look at the environmental standpoint, but then there's a lot of other pieces that also go hand in hand, right? Like, for example, social, like what's the social reading on Tesla? Like, remember, I was getting a lot of DMs about folks as it pertains to, like, people experiencing racial discrimination or racism within Tesla factories. Like, those things have to be rectified. They have to be acknowledged, and then they have to be worked on. And then on top of that, they have to literally be absolved. And then, of course, the governance part for Tesla, though that the company runs well, but yet at the same token, one of the things within government and in the governance of Tesla is, if something happens to Elon, then what happens to Tesla? Like, that's one of the major running questions. Now, of course, they're working to absolve those things, but nobody is as outly public as public or as a polarizing figure as one of the founders and CEO, which is Elon Musk. So that's going to be something that Tesla is going to have to rectify, versus a lot of these other companies. Like, they have strong social and they have strong governance, so that their environmental may be weak, but they're knocking 2 out of the 3 out of the park. So that's ultimately how they could probably be scoring a lot higher than, say, for example, Tesla. Now, of course, that's just S&P Global's ESG score, but there's multiple different scores in which that we can look at. So yeah.
There's another question mark right underneath that.
Okay, so was that BlackRock?
Yeah. So they're talking about, it says BlackRock CEO thinks ESG has been too politicized, when, as far as to say he's quote unquote ashamed of being so closely connected, and ESG may need a rebranding. So earlier we were talking about how the buzzwords and the marketing words tend to fall to the wayside if it's not attached to dollars. So companies that are focused on ESG, what you'll notice in the earnings reports are they'll start to highlight the actual bottom line, this practice here resulted in X amount of dollars. And so the people that are really invested in it, that's all they're going to care about. So everyone else out there in the political arena that's saying, oh, it's too, woke or whatever, those people, they're just talking. They're just talking right now. It's just noise in a vacuum. It's not going to translate to less dollars because a company is seen as X, Y, and Z, not for the real investor. I'm talking like big money institutional investors. And yes, BlackRock owns everything in the world, pretty much, so there is that. But again, we're not going to know unless they start selling shares to put their money where their mouth is. Then it's just noise. So that's what we get to pay attention to. And Mark, we might want to do an episode on BlackRock.
Yeah, I mean, we can. I mean, again, it's like you nailed a lot of the things on the head. It's like now we're getting into the place where it's like, okay, hey, like anything else, right? We go through this phase one of things, the phase one of the conversation, and ESG definitely went through its phase one. And now we're stepping into phase two, which is literally like, okay, hey, who's really doing the work? Who's really making the impact? And then also at the same token, like, how is that affecting their bottom line, like you just said? And I think that we're moving into that phase. Just like, when we look at AI, right? Everybody's just talking AI, 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 AI. But interestingly, the companies that are actually positioned well, that are doing the necessary work, they don't have to mention AI. They just have to like literally mention exactly what it is. And, shout outs to MKBHD, who actually did this. Like he actually did a quite dope analysis on Apple, where he talked about like, okay, hey, during their last announcement of products and everything else, they didn't even mention AI. They didn't mention that. They mentioned AI 0 times in their entire event. AI wasn't mentioned at all. And then another thing that they didn't mention was virtual reality, which was, a slight little dig at, probably Meta. But but they didn't mention these things. And instead, they mentioned the actual work, and they actually mentioned other things. Now, another thing that what they did was they patented a lot of the other things that literally would surround the things that we would know of, and they just coined them as different phrases. So maybe that's something that we probably need to pay attention to, but that's for a whole other day. That's
well, again, that goes back to the branding, and that branding, their patent, they have trademarked it and they patented the technology, that goes back to the dollar, back to the bottom line again. So here we are. It always comes back to money.
Look, you'll always come back to me. All right. So I think that we got the part one out of the way, and we'll be excited to share part two. We hope that you guys enjoyed today's episode, and this may be a run it back or upon the replay, however you consider it, but definitely like take some notes to this, or go back and reread your notes, and then also analyze as it pertains to the companies that are within portfolio. It's very, very interesting. So again, yeah. Oh, and she was first in the chat, and then she came in and dropped in another one. She said, remember circa 2010 when that Apple factory installed nets so people couldn't delete themselves. 'Tis true. They hired counselors after that, and she also said, I'll see where that fits on the ESG spectrum. Well, that fits on the social side of things, definitely, for sure. And then on top of that, the governance side, because of the fact that they're fast acting on related issues. So well done. See, look at that. A squad full of scholars. Okay, I think you're trying to remove the comment. So
no, I didn't do anything.
Okay, I don't know. That's the producer. I'm sorry, Levic. This is where it's like I should have done hands up and just, hey, shout outs to Levic, our producer in the background, who does a lot of the work to make us look good. All right, y'all. Thank you so much for rocking with us and enjoying today's episode. If you learned something, go ahead and smash that like button. If you're new and you learned something, also go ahead and subscribe, because there's a ton of other content. A few great content, like we're just a collective of content creators that just want to share information and knowledge with what we've learned, or what is it that we know, so that way you guys can use it in your everyday lives for the free. So if you like that, go ahead and subscribe, have the notification bell turned on, and like. Until next time, I am Mark Monroe.
And I'm Jillian GC, in the place to be.
And this has been Executive Education. Thank y'all for joining us, and we will see y'all next week. Be sure to watch The Red Line tomorrow with Abby and Chris. Peace, y'all. Yes.